All right, everyone. Hello, hello, hello. My name is Pierre. I'm the organizer of Crypto Traders International. It's 5 past the hour, so I think everyone had enough time now to join. And I want to welcome you to today's virtual meetup about crypto market data platforms. Also, I want to highlight there's a document that I will share with you today to make the presentation or to show you these different crypto market data platforms. It's an overview. It's a first initial overview of data platforms, like how many employees they have. I've extracted the information about employees from LinkedIn, where they're headquartered, since when does the company exist, which features they have in the data they provide, and a little bit about the social media profiles as well, API documentation, and which kind of data you can expect to find on these platforms. There are a lot of more platforms than just these, oh my God, these 10 or these 11 platforms. These are the ones that most of us consider as the most well-known ones and the biggest ones. Okay. A few details before we start with this presentations about Crypto Traders International. We started out as a meetup community in Berlin in 2018, just after the height of the last bull market. And I can see that a lot of people are probably now just joined the crypto space. Probably some of you have been already around for quite a few years. But for the ones that are just new to the crypto space, the market has cycles. Every 2 to 3 to 4 years, we have a bull run. And a lot of people, especially in mainstream media and in every part of our society, get aware of cryptocurrencies. We've just seen it over the last days with Tesla, with MasterCard, and many, many other companies. And we see a lot of people joining at the height of the bull market or when there's a lot of activity in the market. And that's what we're currently also seeing as well. So our group actually started after the last bull market bubble popped, or in the height of the altcoin season, which always follows the Bitcoin bubble, let's call it that way, or the Bitcoin peak. And we've been back in the days working on algorithmic trading, on which data can you use to get better insights about the market. We've been looking at different research papers on Google Scholar about finding correlation in data sets. We had really interesting meetups in Berlin until the beginning of last year, when, of course, the pandemic hit. So we changed our model to organize online events and also started incorporating more communities across the world. That's why we have so many people here from different places all around the world. Okay, that much about the community. So since we have been looking at quant trading cryptocurrencies in a more algorithmic or systematic fashion, data was always important to us. So I personally started out as a trader, since my background is in analytics and in data science and in artificial intelligence. I know how the life cycle of algorithms work. You can use data always to educate yourself on what's currently going on in the market. And we will get into the details of which kind of data sources you can use for that. But you can uncover market inefficiencies and think about with which kind of trading strategy you could make use of these market inefficiencies, like arbitrage, when one price is a little bit more expensive on one exchange than on the other. Alameda Research, which is a prop trading quant fund from Hong Kong, very popular one, and also the owner of the futures and derivatives exchange FTX, they are very big into arbitrage, and they're trading billions of dollars every day in crypto. So arbitrage is a great strategy. And for that strategy, you need to know in real time what are currently the price levels of different cryptocurrencies across exchanges. So for the folks with a more quantitative related background, I think there's not much to explain. I've been listing here as well the API documentations to these data sources. So you can connect to the API, pull the data into whatever database you have and crunch the numbers there. Run your models on it, do some data cleaning, data prep, and then find some interesting correlations. For everyone who doesn't have a sophisticated data background or has one background, some of these data sources, they just have charts. So you can look at the data in a very visual way. And some of these data sources, they don't even have a visual representation of their data. You can basically only pull the data out over their API, which is like an interface to the data they have, where you can pull it out and pull into your Excel, or as we see it right here, into Google Spreadsheets. There are a few plugins for Google Spreadsheets that pull the data right into there. You can analyze the data in Google Spreadsheets. So, but let's talk a little bit about the different data sources. So we have financial data in general. For folks who are from the traditional financial industry, think that a lot of these data platforms are trying to be the Bloomberg terminal of the traditional financial industry. So here the first one, Kaiko, for instance, they don't have any visual representation of their data. But what they basically have is financial data from particular assets. I think they have more than 40,000 different currency pairs across more than 100 exchanges. And they provide real-time information about every single asset, about every single cryptocurrency at these 100 different exchanges, real-time data. So if you're running an algorithmic trading strategy, that real-time data feed can really help you to make real-time trading-based decisions. If you are just a trader, not so much focused on the quant trading side, then real-time differences in price between exchanges can also help you to identify certain inefficiencies in the market. But also as well, like aggregated trading volume across all exchanges, aggregated order book data, which allows you to identify where you have short-term selling pressure. I mean, if we look at today's Bitcoin price, which was going somewhere north $48,000, then with aggregated order book data across all exchanges, you can basically see where is likely going to be the ceiling of the current price movement. And you can potentially even put your short there to short the market after price went to the ceiling for current price. So that is why real-time data is really interesting, but also what a lot of people, and even Mike Saylor from MicroStrategy, who just joined the crypto market a few months ago, I think 3 or 4 months ago. And Michael Saylor comes from a traditional business intelligence analytics company. When he was looking at the data that is available in the crypto space, then he was very surprised to find that the data in the crypto market is really hard to access. And I think everyone who's been in the market since a couple of years, and everyone who's been looking at different data sources understands how early we are in this market, and that the data that we have available is still very hard to collect, very hard to analyze. Sometimes you have gaps in the data, partly also because most of the exchanges that were built in the crypto space are still immature compared to exchanges from traditional markets. There were a lot of traders who were just giving up because the exchange API wasn't working. I have a lot of quant traders in the community who are just complaining about exchange APIs every day. So I think also from that perspective, having an aggregated data set from different exchanges helps you to bridge these gaps of immature exchange APIs or faulty exchange APIs. So Michael Saylor said it's absolutely hardcore. It's so difficult to access data in the market or to get any data. And especially what is very difficult to get historic data, like going back to 2011 when Bitcoin first actually started to be traded on exchanges. I mean, it was already, 2009 when the exchange paper came out, but it took another 2 years, not exchange paper, the white paper of Bitcoin, but it took another 2 years until it was liquidly tradable on exchanges. So that's pretty interesting. Also being able to have historic data sets available at tick level. So every single trade that goes into an order book available in historic data since, I don't know, probably since 2014. Kaiko here, for instance, one of the companies that exists the longest in the market in our list here. So I think Kaiko is able to provide really granular and detailed data sets from a very long period of time. And that's really hard to find in the market. It's also very expensive. Good, clean data in the crypto market is very expensive, but nothing compared to the prices you see in the traditional financial market. So still cheap. Okay, so besides the data that we can get on exchanges, order book data, real-time price data to identify arbitrage opportunities, market cap, trading volumes, we also have on-chain data. And with on-chain data, I mean everything that is happening on the blockchain. So when one coin is moving from one wallet to another, right? That's a transaction. It's publicly accessible through block explorers. So let's make an example. Bitcoin block explorer. You can follow every single transaction that is happening on the blockchain with a block explorer. These block explorers, these analytic tools that let you search a blockchain, because blockchain data is not visually available just like that. These are hosted by different providers, right? Blockchain.com, for instance, is one of these providers that have a block explorer. So you can type in a transaction ID, you can type in the address of a wallet or of an exchange or of a mining farm so that you can see what's happening at big mining farms. When are they sending cryptocurrencies out? But you can also type in the details of a block that was mined to see the entire number of transactions that was in the block. And here we can see mempool size, for instance. I think mempool was the amount of transactions that are currently waiting to be confirmed. So when you send one transaction from one wallet to another, that needs to go over different nodes. And once a transaction is being confirmed by a different number of nodes in Bitcoin network, it's 3 confirmations. Then the transaction transaction is being accepted on the other side. So the Bitcoin network, it's 3 confirmations. In the Ethereum network, it's 20 confirmations, but also every blockchain has a different transaction speed. On Bitcoin, it takes on average about 45 minutes until you have 3 confirmations. And on the Ethereum blockchain, it takes about 2 to 6 minutes, depending on, again, how digested the network is. So we have on-chain data. It's also very interesting to see what's happening on chain, like how many Bitcoins are going right now into an exchange wallet. That helps you to identify, oh, the price is maybe falling right now. It might be falling in near time because there's more selling pressure. More people want to sell because they've moved their cryptocurrency to an exchange. Then other network behavior, like when miners are moving cryptocurrencies, it also probably means that they're looking to sell their cryptocurrency. But also on the other side, when a lot of people moving the cryptocurrency from the exchange wallet to their own privately hosted wallet, that's an indication, okay, people are trying to hold their coins. They don't want to sell them. And many other interesting things. You can basically see how many Bitcoins are going to PayPal's wallet. So you can identify what's the current demand on the PayPal side. CryptoQuant, they could literally show when Elon Musk was buying Bitcoin. Right? They have the on-chain data. They could see it on Coinbase. Very popular exchange for the institutional investor community. And you could see the exchange outflows from Coinbase were spiking the weeks before Elon Musk bought. It's crazy. And the price was still dumping. So it's very interesting to see sometimes what is influencing the price and what not. It's most often just like public perception instead of what's really happening. Like the amount of cryptocurrencies we currently have available to the market, because Bitcoin has a limited supply compared to other cryptocurrency, which basically the supply can be changed whenever the founders of or the creators of these cryptocurrency feel like they want to change things. But with a cryptocurrency that has a limited supply like Bitcoin, it's very important to see when assets are moving off an exchange to an exchange, supply and demand indications. So therefore, on-chain data is also really, really interesting. Glassnode traditionally seen more an on-chain data provider, also since recently, I think, provides some derivatives data. So derivatives data like options and futures. I don't know if you guys know the difference between spot exchange and derivatives or futures exchange, where on a spot exchange, you basically only exchange the physical assets, right? So you buy one cryptocurrency, exchange it against another cryptocurrency. But on futures and options or derivatives exchange, you don't trade the physical asset, you trade the derivative. And what is interesting to see, if you look at the data in the market, then the volumes on derivatives exchanges are by magnitudes higher than the volumes on spot exchanges. So people who trade futures, a derivative of an asset, or options, a derivative of an asset, there's much more activity going on than people who are actually trading the physical asset for different reasons. Some people like to involve more risk when they trade in terms of putting leverage or shorting the market. And then other entities, they just don't want to deal with the physical requirements that you have to go through, right? You need to hold the asset in custody, you need to move the asset, then there's regulatory issues involved. Some countries, cryptocurrencies are banned, so you can't trade the cryptocurrency itself, but you can trade the derivative. So in the United States, where still it's not clear what the regulatory environment is going to look like, especially under the new Biden administration, a lot of institutional investors invest into derivatives. That's why you could especially see at the end of last year and this year, finally, the exchange trading volume on the CME, the Chicago Mercantile Exchange, going through the roof, absolutely crazy, because the institutional investor community in the States finally started being more interested in cryptocurrencies. And where do they start trading? Right at the exchanges they already trade at. So also, I think at New York Stock Exchange, where Grayscale is listed, Grayscale has different index products or derivative products of just Bitcoin, I think GBTC, right? Where basically investors could buy a Bitcoin, the derivative of a Bitcoin, not the underlying asset. So they don't need to take care of custody and all that stuff. So derivatives data is also very interesting. By the interest rates that are currently being given out to the borrowed capital on derivatives exchanges, you can also see how over leveraged the market is, right? I mean, the more leverage people use, the more interest is generated in the market. So on interest rates across different exchanges, you can see in an aggregated view, you can see how over leveraged the market is. And the more over leveraged the market is, the more the market tends to be more volatile, right? We have seen that actually when Bitcoin reached the last all-time high, not a few days ago, but let me have a look. When was that here? On the 7th or 8th of February. Yeah, I think 8th of February. I don't know what the number was, but 42,000, I think. We reached 42,000 and then the price collapsed in the following days, even by something like 30%, which was the biggest correction we have seen in this market. And that correction was caused because the market was just absolutely over leveraged. And it's very easy when the price takes a little dip and hits all these liquidation limits and people getting liquidated, then it just is causing a mass cascade of liquidations in the market going down. So you could actually identify the short-term risk if you look at derivatives data. So derivatives data is also very interesting. Okay, let me see. What other data types do we have here? With exchange data, here we have Nomics. They are really great in looking at exchanges and trying to look if exchanges are actually providing trustful data. Because for time there were, when a centralized exchange, we also have decentralized exchanges, which working in completely different principle. For a time, we had this debate going on in the crypto community where exchanges were basically faking their trading volumes in order to give an incentive to traders to join their crypto exchange. And it's still happening today, especially with unregulated exchanges, especially with exchanges coming from the Asian space. We see a lot of fake volumes, blown up volumes on exchanges in order to show like, yeah, we have the largest trading volume in the market. And then data collectors started thinking about, okay, like how can we actually identify exchanges with real trading volume that don't show fake trading volumes? Bitwise came out with a report about the exchanges that potentially are deeply involved in generating fake trading volumes. And then I think Nomics or Messari, they also published a data dashboard showing the exchanges that provide real trading volume. It was pretty interesting. But the debate goes into much greater detail because also these reports, they weren't being done properly about which exchanges are reporting fake volumes and real volumes. They could have been done in a better way and so forth. So I'm not going to go into great details, but Nomics is a great place for you to look at trust scoring of exchanges. We also have more places that look at something like trust scoring, CoinMarketCap, exchange listing websites. There's also CoinGecko, which I'm really not a big fan of. So then we have financial data. And financial data is really focused on the asset, on the cryptocurrency. What's the market cap? What's the historic price movement of cryptocurrency? On which exchanges is this cryptocurrency being traded? What's the price at different exchange? What's the trading volume on different exchanges? That's really the financial data of a particular asset. Then we have categorized news streams, indexes. That's also something really interesting from Messari, because again, some of these platforms, they really want to be like the Bloomberg terminal of the traditional financial markets, like categorizing news and like providing you intel about certain projects, also about, let's say, certain categories in the news, like regulations, central bank digital currencies, development activity on certain protocols, hacks in the industry. It's really interesting. So they have these like categorized news streams. Messari also has indexes. So indexes is when you say, okay, let's categorize some of these coins. How would we categorize them? There's some that focus on privacy, other industries like the DeFi industry itself. And in the DeFi industry, you have decentralized exchanges. Then you have also centralized exchanges. And then you have infrastructure protocols that are just focusing on the infrastructure in the DeFi space. And then you have oracles and many more categorizations you can do with different assets in the crypto space. So these indexes, they're really helpful. So then we have also social metrics, like, you know, what's being spoken about certain cryptocurrencies on social media networks, like what's being spoken about Bitcoin on Twitter, on Reddit, on Quora. So these social metrics, they really help understanding the social media side. So the community density about a certain asset is the highest in the crypto or in the digital asset space. So you wouldn't see a large community of fans about a commodity like crude oil or rice or sand, or I don't know, you wouldn't, I mean, okay, we've seen crazy sentiment about Tesla and Apple, but imagine some mid-market company in Germany being listed on a stock exchange in Stuttgart or in Frankfurt or in Berlin even. It wouldn't have very much big community of investors that are raving about this asset. That's that's a development we can really see in the crypto space happening. Since you have these large communities, social metrics are really helpful to understand sentiment of a certain asset and help you to may also find some correlations in how the sentiment of an asset impacts the price or impacts current momentum, like trading volume in a certain amount of time. So social metrics can also help a big deal. So Skew is explained providing derivatives data, like of the derivatives products. Delphi Digital, really great research, market reports, like more like financial models of an entire sector and of individual protocols. And what did I write? The button-up research reports. So Delphi Digital, the team that comes from the traditional financial markets backgrounds, like all from big financial institutions, and they come off with their financial models and showing to you like how different assets look like in these financial models. Really interesting. And then The Block is actually a news provider about the crypto space. They also provide research, but a completely different way. They look a deep dive on protocols and they look at an ecosystem like the Ethereum ecosystem and which projects participate in this ecosystem, or in the Cardano ecosystem, or in the Solana ecosystem. So also very interesting research reports from The Block, also about regulations and also about the portfolio of different venture capital investors that give money to these startup projects, to these blockchain projects to see them grow. But some people want to understand, okay, where is money going in which project? All right, and then Sentiment also is trying to do a little bit of everything, but I think they really started out with social metrics. So from that perspective, they're really strong in that area, but they also provide financial data, on-chain data, project development activity, like how active are certain blockchain protocols in their development community on GitHub. Yeah, how often do they post updates? How often do they post new code? All this kind of stuff. And like how many contributors you have to a certain open source project.